Is the stock market crashing? Are we seeing a repeat of 2020 or 2018? That's the big question on a lot of traders after we just saw the S&P 500 drop 5.7% this week. The Nasdaq 100 was down 7.5%. The Nasdaq Composite was down 7.6%. And the Russell 2000 was down 8.1%. That's a lot when you don't even count the fact that Bitcoin is down 20% over the past week. There's a lot of stock market crash talk out there right now. I'm going to cut right through it all and get into the charts and tell you what you can expect. Where are there bounce opportunities for this market? How can you manage the risk in an environment that continues to look like a stock market crash? First off, though, make sure to pound that like button and hit subscribe, and so you can be notified on all my future videos as well as live streams I do throughout the week. I'm doing this video with COVID-19, coming off of a couple of tiresome days, but nonetheless, I'm excited to jump into all these charts with you guys, and make sure to also hit the join button down below so that you can get all of my stock market research each and every day. That's going to include my daily watch list and stocks that I'm looking at to possibly trading, as well as my weekly master watch lists and updates on all the FANG stocks and market indices. Click the join button today and subscribe. So is the stock market crashing? Here's the thing. Nobody ever worries about the stock market crashing until after it starts to crash or shows signs of starting to crash. And that's what we're seeing here. Are we really looking at an environment that says the stock market is crashing right now? No, we are seeing an environment where there's some hefty selling, but there's not near the panic right now that's going on versus what we saw in 2020 or 2018. Or even if you go back to the Great Recession of 2008 or the dot-com bubble of 2000, there was sheer moments of panic. But right now, you're not seeing that. What I actually think you're seeing is a lot of big money methodically and steadily getting out of some of their large positions. They're deleveraging in this market because right now the stock market's on the wrong side of the Federal Reserve. Federal Reserve has the green light from the president based off of what we saw in the last week's press conference to go ahead and start raising rates to fight inflation, because President Biden at this point realizes that his base is going to be more impacted by inflation hikes than a stock market that's falling apart. And this is the first time that I can recall the president giving the Fed the green light to raise interest rates, at least not since Paul Volcker's time. And back then it went all the way up to 13%. We're not going to see that here. The country doesn't have the willpower to be able to handle something like that, and it wouldn't be necessary either. But you're going to start seeing some interest rate hikes in the next couple of months as the Fed completes its tapering. Most traders and investors will do very little work to prepare themselves for a market sell-off, or even worse, a stock market crash. Why is that? Because they want to believe that the show will go on forever. And that's indicative by the fact that they don't use stop losses. Most people ask me about stop losses and what do I do? I've lost 50% of my portfolio in crypto. I can't tell you to spin around 4 times and pat yourself on the top of the head 7 times and make all those losses go away. It just won't happen. Instead, what most people realize is that they should have been using stop losses all along. Because when the market takes the elevator down after taking the stairs up for years and years and years, those profits that seem like they were never ending will suddenly vanish, and they don't come right back. You have to work at them. And a lot of people will get into the party far too late and actually lose the capital they put into the market rather than the profits themselves. And let's be frank here. The selling that we've seen so far is nothing compared to what we saw in 2020, what we saw in 2018, in Q4 of 2018, and 2008 and 2000. So many of you guys might be trading for the very first time, and what you've seen over the last 3 weeks of selling to start this year off is really rocking you and shaking you up here. And it should get your attention. It should, while it's early enough in the sell-off, to say to yourself, okay, how do I manage the risk going forward? Yes, I'm taking some lumps right now, but what can I do going forward to not let this happen again? Because most of the time, people only start caring about stop losses and managing the risk after it's too late. And we're starting to get to that point where a lot of people are too late to actually start managing the risk in the way that they should. Because like I said, it appears right now it's more about the banks and the big money players lessening their exposure, methodically getting out of their positions, than it is about panic in the market right now. I think that retail is still hoping that this market comes right back up to all-time highs and forgives them yet another time. But there's going to be a time, whether it's this time or sometime down the road, the market's not going to forgive you. So you can start choosing to use the stop losses going forward and preserve the capital that you still have, or you can let the market demonstrate to you what happens when you choose to ignore the risks that are associated with trading stocks. Now, some of you guys are going to say, Ryan, you're just a perma bear man. You want the stock market to crash. I've seen some of your videos before. That's not true. I've been bullish on plenty of stocks. Some worked, some didn't. But overall in the month, yeah, it's been a great month. I'm making money by the market selling off right now. And I'm not doing that by choice. I'm doing that because that's what the direction the market is dictating to me. In fact, you can look at my trades right here. I'll post them up for you for the month of January. This is how I've been doing. It's been a good month. These are all the ones that I provide as alerts in the trading block, shareplanner.com/trading block. You can get all of them for yourself as well. But until we start to really see retail panic, I don't know we have actually reached a bottom in this market. That doesn't mean that there won't be dead cat bounces along the way, but those bounces should be used for shorting and for selling long positions rather than trying to get long, hoping that the market's going to go right back up to all-time highs. Now, let's go ahead and get to these charts here. SPY, first up, ugly looking chart. But again, you go back to 2021 where we began. I mean, there's a lot of room for this market to fall apart. In fact, what I'd like to do is start off by looking at this weekly chart. You're going to see a steady increase in prices going all the way back to the 2009 bottom. Things were moving methodically and orderly. Yes, we were in a very low interest rate period there, but things didn't get really crazy and out of whack until the COVID bottom was reached, and then it went completely parabolic. In all of my trading years, I've never seen a market take off like what we had just seen, even more so than what we saw in 2000 with the dot-com bubble. And why I think that there's a lot of room for this market to fall is because the market's like a rubber band. The more you stretch it in one direction, when you finally let go, it's going to have a sharp reaction the opposite direction. And so we've stretched this rubber band to extremes. And now we're at the point where we might actually see a sharp pullback. Now, how far could it go back ultimately? I'm not saying this is going to happen next week or in the weeks ahead, but I think that you want to keep an eye on this long-term trend line that goes all the way back to 2009's market bottom. If that's the case, there's room for the SPY to eventually come back down to 290 to 300 area before ultimately hitting bottom. Again, I don't think this is going to happen anytime soon, not this month or the next month, but at some point, I think we're going to see that big correction take hold on the market, and it's going to wipe out a lot of traders. And so for you listening, you got to ask yourself, Ryan may be right, Ryan may be wrong. I don't know, but am I going to manage the risk along the way in case it does? And your answer should be yes, I'm going to manage the risk. I'm going to use stop losses. I'm going to map out my trades, because if they're good trades, they're not going to hit the stop losses and they'll make me good profits. But if they're bad trades, I don't want to take a big loss on them. I want to keep those losses small so that they don't overshadow the profits that I make on my good trades. Now let's look at the daily on SPY here. We just looked at the long-term picture going all the way back to 2009. The daily shows us some big problems here, going all the way back to the September highs that were made, the previous all-time highs, not the ones that were made earlier this year, but the ones that were previously made. And this support level, this one broke this week. And then you have this rising trend line that goes all the way back to the June lows of 2020. And we broke that trend line as well. So there's a lot of problems there. Also notice for the first time since June of 2020, we're trading below our 200-day moving average. We hadn't even tested it since then. And now on the first attempt, it breaks right below. I wouldn't be surprised, especially with the FOMC next week, if there's maybe a little smoothing of fears that take place to where we see the 200-day get recaptured on a dead cat bounce. But again, those bounces should be opportunities to raise cash, not necessarily believe that the bottom's in and that we're going right back up to all-time highs. But now with these two support levels, the rising trend line and this support level going all the way across, going back to September, has broken. What are we watching now with this market? Look no further than the October lows. This is where I think that you'll see panic start to set in on this market, is if we break below these October lows. If you do that, there's not a lot of support underneath for this market to take hold. You have to start looking at these individual previous higher lows that are on the chart to see if any of them might take hold. Otherwise, it may just have to form its own support level out of the blue. And if you're trying to predict that, then you're trying to also catch a falling knife. And we don't want to do that, because most of the time when you try to catch a falling knife, you're going to grab the blade instead of the handle and get yourself all cut up. How about the Qs? The Qs have already broken its 200-day moving average, this white line here. But we also want to zoom in on the October lows and see what are we looking at there. Has yet to break these October lows, but getting very, very close. If those lows break, it's GG's for the Qs, man, because it is not going to look good how far this one still may continue to fall, maybe down to 316 in the short term. Bear with me a second and look at the monthly chart here on the Qs. We're barely even starting this sell-off. Yes, January's been horrific for so many traders out there. But in the grand scheme of things, it may only be getting started. We haven't even seen multiple months of selling since 2020. And so far, we're only seeing about 3 months worth of profits wiped out of this market. Now take a look at IWM. Picture's far worse for IWM. If you look at the yearly chart on it, it's pretty much given up all of its gains from 2021. That is significant. It's the only index that's done that so far. And on the daily chart, for almost a year, I've been highlighting this sideways channel. And it almost got to a point where I was being annoyed by having to highlight it all the time. But that was what was guiding this index. And now it's broken it this past week. Could not bounce off of it for the first time since March. And where this one gets scary is there's not a lot of support underneath, that unless it finds some support of its own, you're looking at a potential pullback of around the 150 to 160s. That means there's a lot more downside still to IWM. Why has IWM been so weak relative to all the other indices? It's because they don't have the FANG stocks in there. And we haven't even really seen major selling outside of Netflix and the FANG stocks. I mean, take a look at Apple here. It's still a few good days away from being right back up at its all-time highs. But when you see how far a stock like Apple, if the selling starts to pick up in these FANG stocks, their market caps are so extreme that they could single-handedly create a stock market crash. Back to the point about the VIX, not quite showing a lot of panic yet. We're nowhere near the panic that we saw in December. And if we put some lines out there for us to look at, you can see that there is some resistance overhead. It's dealing with some resistance that was reached back in September of last year, as well as May of last year. So far, it's just sitting right on it. But if it breaks through this declining resistance that goes all the way back to June of 2020, you could see another big swoon to the upside, kind of like what we saw during the COVID crisis. Now, the other indicator that I look at to show panic in the market is the T2108. This is the percentage of your stocks trading above their 40-day moving average. Right now, we're at 22%, much lower than where we were at the beginning of the week when we were in about 44, 45%. Still not what I would consider an extreme reading. The extreme readings get to when you only have about 2 or 3% of stocks trading above their 40-day moving average. That's where your significant market bottoms are formed. Do I think that we'll see that at some point? Yes. We usually see that at least every couple of years, and we're getting close to it being about 2 years since we've last seen that happen. But those usually tend to be the opportunities that offer some really great long-term investments. So I'll be putting my wish list of stocks together, but not quite ready to pull the trigger on them at this moment. What is the takeaway from all of this? We're seeing a lot of selling, a lot of new people in this market that have never seen this kind of selling before. To me, it's kind of like a walk in the park. But for those who have been only trading for a year or two, you're not quite used to this kind of selling and this behavior out of the market. You're used to getting that instant forgiveness. When a stock goes against you, it goes right back up to all-time highs. But this is something I've been talking about for a good year now, because we've seen so many bearish divergences taking place in the market, particularly with the continuous increase in the FANG stocks, but everything else seeming to struggle in 2021. And now that the FANG stocks are starting to struggle, it's showing itself in the indices as well with these massive sell-offs. So the best thing that we can do as traders is, number one, always manage the risk. Plan out your trades before you get in, even more so now than ever before. If you're going to get into a trade, ask yourself, if this trade doesn't work, and as a human being, there's a good chance it will not work, where am I going to get out at? Where will I know that the trade's not working for me? And then that's got to be your stop loss. That's what you got to do to be able to manage the risk, keep the risk tight, and aim for reward opportunities that are going to give you 2 to 3 times what you're risking on the trade. If you enjoyed this video, please go ahead and like it, and make sure to check out the YouTube membership by clicking join below. Let me know what you guys are doing in the comments, and I look forward to doing some live streams again with you next week. Thank you guys, and God bless.